What should you know about the 5 new CARES stimulus law provisions that directly impact individuals? First, recovery rebate checks. Individual taxpayers can expect a recovery rebate check of $1,200 per individual, $2,400 per married couples filing jointly, plus $500 for each qualifying dependent child, as soon as the U.S. Department of the Treasury and IRS are able to process these payments. The recovery rebate begins to phase out for taxpayers whose adjusted gross income exceeds $150,000 for joint returns and $112,500 for head of household, and finally $75,000 for single taxpayers. The amount of recovery rebate a taxpayer receives is based on information reported on the taxpayer's 2019 tax return or 2018 if the taxpayer has not yet filed a 2019 return. For individuals who did not file a return in either 2018 or 2019, the IRS will use the individual's 2019 Social Security income. Within 5 days of payment, the IRS will send each eligible taxpayer a letter to a last known address with all the details of the amount, date, and method of payment, along with the number to contact if the taxpayer does not receive the payment. Second, special rules for use of retirement funds. The CARES law waives the 10% penalty on early distributions from qualified retirement plans for up to $100,000 for COVID-19 related distributions in 2020. Taxpayers may repay these amounts within 3 years of withdrawal without regard to that year's cap. Although these distributions are otherwise taxable for federal income tax purposes, the taxpayer may elect to include the distribution in taxable income ratably over a 3-year period. This relief is available to an individual who is diagnosed with SARS-CoV, or 2, whose spouse or dependent is diagnosed with the virus, or 3, who experiences adverse financial consequences as a result of being quarantined, furloughed, laid off, having work hours reduced, being unable to work due to lack of childcare, closing or reducing hours of business, or for business operated or owned by the individual due to the virus, or other factors that will be determined by the Treasury Secretary. The CARES law also provides a temporary waiver of the required minimum distribution rules for certain retirement plans and accounts. Under this provision, funds related to these required minimum distributions that normally have to be made during 2020 can instead remain in the participant's account. Third, the charitable deduction. Taxpayers who do not otherwise elect to itemize deductions are allowed an above-the-line deduction in 2020 for up to $300 for charitable contributions made in cash to any qualifying Section 501c3 public charity. In addition, for individuals who itemize, the CARES law temporarily increases the limitations on deductions for charitable contributions made in 2020. For individuals, the 60% of adjusted gross income limitation is suspended for 2020 for cash contributions. For contributions of food, the limitation is increased from 15% to 25%. Excess contributions may be carried forward to future years based on the existing charitable contribution carry-forward rules. Fourth, certain employer payments of student loans. Through December 31st of 2020, employers may provide a student loan repayment benefit of up to $5,250 annually to their employees, tax-free. This extends to both new student loan repayment benefits and other educational assistance provided by an employer under current law. Fifth, unemployment assistance. The CARES law provides expanded unemployment insurance benefits for individuals, including those who are self-employed, who become unemployed, partially unemployed, or unable to work due to COVID-19 on or after January 27, 2020, and on or before December 31, 2020. In general, the unemployment benefit a recipient received is increased by $600 per week. This is referred to as the federal pandemic unemployment compensation. Benefits may vary by state. Stay tuned for Aspire to Money's next episode.